Hello, this is the ChartProfit webcast. We're about 1 hour pre-open on Friday 16th of October. This is the pre-open today. Major support, or the first level support on the E-mini is at 1971. That's the half range of this year's high. And we've now generated a seventh value area above that level. E-mini must hold this level to remain in a strong price location. We saw some selling this week for the first time in 11 days on Tuesday. So this was not convincingly effective selling. The value area here was sort of overlapping lower previous day. We had an outside day here. We saw further selling on the Wednesday here. So 2 days of selling, Tuesday and Wednesday, but not effective. If we look back to Thursday last week, the last aggressive buying day, really hadn't even tested that value area low of that day, even with 2 days of active selling. Did say pre-open on Thursday if the E-mini prints above Wednesday's high, which was 2001.75, this would negate any negative short-term implications of yesterday's red at bottom low. These red at bottom lows usually are tested about 8 out of 10 times. As soon as we printed above the high of that session in here, it just negated this negative selling tail, and all of this generated above this level, which is the most important thing. And if we look back here to comments I made last week at the start of the month, 1st of October, just run quickly through that on the chart. The E-mini and the spider found support at given point of control levels. Then the point of control migrated to 1923. That was the 55-day point of control. I said this is significant. Thought the E-mini might be about to begin a new distribution based on that information. So it looks like this. This was late last month, the big support, the big point of control down here. Same situation with the spider. This is the E-mini. So we just tested that support. And overnight on the Wednesday here, the point of control migrated up to 1923. And that was a very logical level for the point of control to move to, and at that point it looked to me like a new distribution, a new directional move was quite likely, and we said let's monitor price relative to this level from this point. If we saw significant selling mark below here, that would have been a negative, but we didn't. We've had buying, and so far the buying has been much more effective than the selling. So that's where we are currently with yesterday's aggressive buying, green at top, high. We're looking here at the daily breadth indicators for New York, and for the first time since May this month, both these two indicators have moved above their required levels to give us a positive indication on the pulse chart. Similar situation with the Nasdaq here, so let's have a look at that on the pulse chart. Looks like this, and we now have some green in here as a result of that. Price momentum has been heading up since the start of the month. It's now crossed zero. Most importantly, we're above the half range here on the spider, and we're getting some green up here. So as I mentioned pre-open, this looks much more positive. It's necessary now for the spider and the E-mini to hold their half range levels off this year's high. So here's the spider through yesterday's close. We're up at the top of the range that we've been in for a while here. We now need to hold above this half range. It wouldn't worry me too much if we saw some consolidation above that level. We need to hold it. If the market's strong, it should hold this half range. The large caps have moved into stronger price locations, the diamonds as well. One chart that we could really do with seeing some improvement in, which is the lagging small cap ETF IWM. We saw down here a probe below the 12-month value area low, but as we know, we've been following this level for many months. 116 is the major point of control, and we need to see some price action above there. I consider this a negative for the market unless the Russell 2000 ETF can do this. So we want to see price above 116. So this is a key chart. Here's the diamonds, Dow Jones ETF, large cap, strong price location here above this half range and above its major. This is the Qs. Major point of control, as we know, migrated to 105.10, and we're consolidating above there, which is positive. And this chart has to hold this level. Price down here would be an indication of weakness, so this chart needs to hold 105.10. Going into this week, the two key charts as far as resistance were concerned were the Russell 2000 IWM we just looked at, and the FTSE 100, the UK FTSE 100 index, with this half range level here, kind of double bottomed, if you like, on this major point of control, which is a bullish, can be a really bullish pattern. And now we need to see the FTSE doing this. So currently we're still in long-term weak price location below that half, but if we can get some time above that level, that would be another positive for the general strength weakness picture. There are other international indices like that. This is the CAC 40, this is the French index, similar kind of picture with that half range there. So just from a global strength point of view, general equity strength, we'd like to see price up here. Just looking at sentiment, my version of the RIDEX assets ratio was higher at 4.9 yesterday. That is a 30-day high, but putting that in perspective, early last week the ratio recorded 3.09, which was a 2-year low. So here's my version of the ratio. This was the 2-year low, and we're up a little bit from there. But as you know, previously, earlier in the year, we reached sort of crazy levels up around 14. Just looking at the bear fund assets in isolation, we had a 3-year high in the bear fund assets over here. Obviously the bullish sentiment is increasing because that bear fund assets level is falling pretty rapidly, but still elevated. Bull fund assets in isolation hit a real low over here, but rallying a little. And the money market assets actually are still quite high, this being the peak, recent peak here, and we're still quite high. And from a contrarian point of view, like the other charts, this is not bearish. So as we know, recently quite a few of the sentiment indicators over the last few weeks have hit quite extreme levels. So this one here, public poll from AAII, I usually do a 4-week moving average of the net, the bulls minus the bears. That's the black line at the bottom here. So, you know, early August we hit an extreme down here, the lowest that indicator had reached for many months, back to the middle of 2013. Seeing a slight increase, completely normal in bullish sentiment. In the bear market, what will often happen is this 4-week moving average will come back off an extreme low, I've noticed, back into slightly positive territory before the market begins its next leg down. And we're kind of there now, but there's nothing here which is necessarily bearish. Same with the Investors Intelligence poll. Has reached a real extreme down here over the last few weeks. The actual net figure itself is back into positive territory this week here. Bulls percent was higher at 36.5. You'll note that was up from 24 point, but you'll note that was the lowest since December 2008. So this really was down here, this net figure and the 4-week moving average of net in black, really quite an extreme bearish reading, sort of measure that will often bring in a market low. Same thing with the exposure index. That's the measure of active money managers' current equity exposure, and that reached 16.39 down here last week, previous week, and that was the lowest reading since the one back here in October last year, which actually was even lower at that point. And look at US fund flows. We've actually reported a net inflow this week, in the week to the 14th of October, net inflow of 2.5 billion. But again, 5 weeks ago, that 4-week flow number reached a negative 30.38 billion down here, and again that was the lowest since February 2008. So just to reiterate, sentiment really at this point in the market here, late August, early September, really reached extreme bearish sentiment levels, and we're seeing a bounce from there. It takes a little buying to do this. With short covering, we're getting the rally. We just need to work out, is this something that's got legs and will possibly carry the market out to a new high, or we're going to see consolidation at best. And the best way to do that in the shorter time frame, first of all, we follow the pulse chart, We watch particularly this half range level on the major charts, 1971 for instance here on the E-mini, and we watch the imbalances, the reds and the greens. As long as we remain above that level in the short term, it's pretty positive. Red mark down here would definitely indicate a retest of the point of control at 1923. Currently things looking okay. Look at the supporting charts. This is T-bonds, TLT, the T-bond ETF, and we've talked about these two levels, the 12-month point of control here and the half range off the June low here, and that's actually been support since that point. And as long as we hold these levels, this support band here, this is strong. This is USO, oil fund ETF. We've seen a pattern from this low to this high with the halfway support, support, support. That's a strong pattern to look for. Subsequently, the chart tested the August high over here, and that was rejected. We've seen a sell-off, and now we need to see this chart hold this new slightly higher halfway point to remain in a strong location. Price down here would be weak. GLD, the gold ETF, there's been no migration, for instance, of this point of control, so this is still resistance up at 115.12, but the momentum is currently with this chart. We're positive and heading higher. If GLD managed to move into price location above that level and printed some time, probably suggests a test of this level here. Just zooming out a bit, the chart looks like this, so you can see where we've come from, and considering how far it's declined over the last couple of years, my inclination is to see price above this level before looking at the long side. Been talking about possible turn for the dollar, looking at the dollar possibly moving weaker. We've mentioned this over the last 2 or 3 webcasts. We saw quite clear resistance from the halfway point off the high to the low, which is normally a pretty weak pattern. The chart is currently below its point of control here, the 12 month at 95.22, which is weak price location, and currently we are below this level, which is from this low to this high, the subsequent high, and then the halfway point here. So this is really weak price location, suggests a retest of this low. I wouldn't be interested in the long side unless the dollar index can get back up here, but the dollar index is slowly moving and the dollar generally into a more vulnerable, weak position. Just the clues we're seeing here are playing out somewhat. And here's the Euro FX chart, and if we look at the move from that low to that high, and here's the halfway point and there's the support. It's almost like a mirror image of what we've just seen, and again here we're moving into a stronger location. So this is evidence of strength. So if we can hold above this 12 month at 113.40, puts this chart in strong price location and suggests we'll see further strength. We just have to hold on here, and just see some minor oscillators turning up, but again evidence for weaker dollar side. Pound, dollar, I've talked many times about all this resistance, it's overhead resistance for this chart up here. Just not interested in the long side at all, but currently the chart printing above the halfway point here from this low to this high. Chart becomes weak again down here. Dollar yen looking weaker, like the dollar index from this high to this low. Here's the halfway and there's the resistance. We're back underneath the 12 month, which is here. 117.68 is the big support, which was tested briefly here back in that August sharp decline. If we now see price printing some time underneath here. Again, that's a suggestion of further weakness. I talked about in the short time frame how the Aussie dollar may turn higher from these levels. We're kind of seeing that at the moment. There is some strength coming in, but again on this chart, the overhead resistance, spot 76, is a major level of resistance for this chart. I think we could see that tested. Okay, I will conclude there in an effort to get the video ready for approximately the open today. Let me wish you a good weekend and thank you for watching.